Good afternoon, ladies and gentlemen. Today we'll be discussing 116 reasons why I believe the crypto bull market will continue into 2026. Everything in this video and on this channel is not financial advice and is purely intended for educational purposes. So first things first, why did BTC dump from 125K to 80K? Goes without saying that there has been a lot of selling from four-year cycle believers. We have experienced a longer than expected US government shutdown. There has been some macro uncertainty and some Fed policy uncertainty in the past several weeks. We've seen some funding stresses in the repo market, which is related to the US government shutdown. We've seen a modest stock market dip, which obviously also had a negative implications for BTC. We've seen some selling from some of the smaller digital asset treasuries. We've seen some selling from BTC OGs. There have also been some rumors of some contagion-related selling after October 10th event. And to a lesser extent, there have been some rumors of some BTC whales, quote-unquote protest selling after the latest BTC core update. So essentially, a lot of things have come together to induce this uncharacteristically rapid dump from 125K to 80K that we've seen in BTC over the past 6 weeks. So I'm going to give 116 reasons and charts which support the thesis that the BTC bull market is not over and that the bull market will continue into 2026. So first things first, the recent minus 36% drop that we've seen in BTC is nothing that we haven't already seen. If you actually take a look at all of the drawdowns from this cycle, this current dip is the fastest, sharpest, and the biggest, but we've already seen a negative 32% drop in early 2025, and we've seen a 33% drop in the middle of 2024 as well. These drawdowns are roughly in the ballpark of the current negative 36% drawdown that we're seeing right now. So it's nothing crazy relative to the rest of the cycle so far. On the technical analysis side, right, the 3D candle closed as a bullish hammer. This is usually a reversal pattern. We need to wait and see whether we build a base here in the coming 2-3 weeks, but this particular 3D candlestick pattern is bullish. We are still, from a higher time frame perspective, BTC is still technically printing a higher low, right? Assuming that this 80.5K low was a local low, we're still in a pattern of continuous higher lows. BTC has also just tested a 2-week demand zone. So we're essentially at support. And again, as of right now, it's still technically a higher low. On the monthly time frame, we are in a long-term ascending parallel channel, right? This channel has started in 2023. This sort of diagonal support, we're still at the diagonal support. Essentially, this is a bullish structure. This has been a much sort of a slow and steady bull cycle, but this structure is still unbroken and still intact. Similarly, there is an ascending parallel channel that's on even longer time frames on a logarithmic scale. And so this diagonal support dating all the way back to 2013, it's still technically intact, and we have just tested the lower side of it. So we are technically on logarithmic diagonal support at the moment. So there's also a diagonal that has been resistance in early 2021, in late 2021. It was also resistance in early 2024. We finally broke through it in late 2024. We tested it as support in early 2025. And right now we just tested it as support again, right? So potentially it's just another diagonal resistance turning support flip. So the weekly RSI has not been this low since the FTX collapse, right? And the only previous times when weekly RSI was this low was the 2018 bear market bottom, the COVID bottom, and the 3AC/Luna drop in the middle of 2022, right? We're currently roughly at COVID levels, or at least the RSI, weekly RSI was at around there when BTC was in the low 82,000 a couple of days ago. But this is essentially the lowest RSI reading on the weekly since 2023. And if you essentially match these weekly RSI levels to the chart, you will see that this usually coincides either with global bottoms towards the end of bear markets or really sharp drops such as the COVID drop. In a similar vein, the daily RSI hasn't been this low in 2.5 years. So the last time the daily RSI was at this level was summer of 2023. And if you run sort of forward returns on this, when the BTC daily RSI dips below the 21 level, both in terms of future expected returns as well as the percentage of positive returns, this is statistically looking favorable, especially, projecting it several weeks, even a month into the future. So another BTC indicator is the distance from the power law, and it's currently at buy zone levels. Again, this distance has usually been seen either towards the end of bear markets or around the time of very sharp drops. If you make an indicator that essentially draws all of the drawdowns of the cycle and you connect their respective bottoms, you will see that it's a perfect diagonal support on the indicator. And essentially, this very interesting gentleman, Nanya Business, also known as Plaza on Twitter, when we were trading at 95,000, he already approximated a potential bottoming, according to this indicator, at around 84K. We ended up sort of stopping this decline, at least so far, at around 80.5 thousand. So another very, very interesting pattern. BTC MACD reading on a 1-day chart, 2-day chart, and the 3-day chart is the lowest of all time. So the last 3 times, the 50-day moving average has fallen below 200-day moving average, aka a death cross. The last 3 times, this was a good buy, at least this cycle so far. And similarly, if you sort of project future returns when this has been happening in the past, especially on multi-week and multi-month timeframes, this has usually resulted in positive returns more than 60% of the time, historically. So interestingly, if you check out all of the past situations when Bitcoin was trading 3.5 standard deviations below its 200-day moving average, the only times when this has happened previously was the bear market bottom in November 2018 and also during the COVID drop in March 2020, right? And if you actually extend that even further and look for situations when Bitcoin was trading 4 standard deviations below its 200-day moving average, it only happened once before. And that was during the COVID drop. And we have actually, on November 21st, a couple of days ago, we have hit this similar level. It's less than 1% chance of something like this happening. So it's a very, very uncharacteristic and very sharp drop. So the market is very fearful, right? And the last time, from a statistics point of view, the last time we seen a drop this sharp was again during the COVID collapse. So the Leladec indicator, popular indicator in the technical analysis circles, so to speak, has flashed a buy signal on the 3-day chart for the first time since the FTX collapse. And historically, this has only happened during bear markets, or actually at the very end of bear markets during global bottoms. Last 2 times it has happened was during the FTX collapse and during the Luna/3AC drop. So this has a very good hit rate so far. And it just flashed green for the 7th time ever. So if you do some technical analysis on the total chart, you will see that we are currently at the 200 EMA, which is also where the crypto total market cap has found support the last 2 times in 2024 and 2025 respectively. In a similar vein, crypto total market cap is currently at horizontal support and diagonal support at the same time. So let's dive into on-chain analytics as well. So depending on the indicator that you look at, most of the recent selling is not so much coming from long-term holders or miners, but rather traders and short-term holders. You can see this on some of the metrics provided by the Crypto Quant Analytics platform. The short to long-term holder in profit percentage is the lowest in 5 years. It hasn't been this low, dating all the way back to 2019. And again, if you courtesy of a gentleman named Subutrade on Twitter, if you forward project these kinds of situations, you will see that there's a positive result the vast majority of the time if you project this several weeks or several months into the future. The short-term holder supply is at the lowest level ever. And that actually was already the case when we were at 91,000 several days ago. We ultimately went even lower than this towards 80.5. So the short-term holder realized profit to loss ratio is also the lowest in 5 years. What this is essentially telling us is that the market is undergoing complete capitulation, especially from the short-term holder and trader perspective. So these kinds of dips have usually caught local bottoms, cyclical bottoms, the last couple of times throughout this cycle. And this one is particularly sharp, even sharper than the ones we've seen in 2024 and 2025. The short-term holder SOPR is starting to enter into the buy signal zone. Again, the previous cyclical bottoms that we've had in 2024 and in 2025 were also accompanied by similar readings on this STH SOPR indicator. Realized losses are the highest since the Silicon Valley Bank collapse in 2023. Again, this is another signal of capitulation in the markets. PUEL multiple is at discount levels. So generally speaking, this indicator is at levels that have previously been associated with medium-term bottoms in the markets. Recently, we've seen the biggest exchange outflow of all time. There have been some rumors that this may have simply been exchange rebalancings, but nevertheless, the last 4 times that something like this has happened on chain was either the beginning of a bull market or the end of a bear market, or it happened towards the end of the 2017 cycle, but still several weeks, if not a couple of months of bullishness followed after that. Net realized profit and loss is the lowest since the FTX collapse. And this also represents capitulation and that we've had a very major flush and a very major reset in the markets over the past several weeks. SSOPR is preparing for accumulation breakout. It has not reached levels that are associated with global tops this cycle so far. It's actually roughly just over 1.02 in the middle of the oscillator. There's an argument to be made that this is sort of a bull flag formation and accumulation formation, potentially preparing to break out higher to actually go towards the levels that we've seen in 2017 and 2021. SOPR is still in a bull cycle structure, right? So if you take a look at this, for example, in 2017 and 2016 during the bull wave, SOPR never dips very deeply into sort of the red zone, right? It always just jumps right at the one level and just continues going higher and higher. And similarly has happened in late 2020, early 2021. And again, since 2023, SOPR has never gotten into sort of this classical bear market territory and instead has been just bouncing at the one level. Stablecoins are essentially in a super cycle. They have been continuously growing all throughout over the past 3 years. I think this is generally bullish because whether that's being used for payments or whether that's dry powder on exchanges, the more stablecoins there are in the world, the more stablecoin adoption there is in the world, the more essentially dry powder there is to be potentially buying dips on these more volatile store of value cryptocurrencies such as Bitcoin and ETH that are effectively driving the price action all over the crypto markets. And the stablecoin SSR ratio is currently experiencing its biggest gap since 2022. Historically, such gaps are bullish and they are usually associated with dips in the market. The stablecoin SSR oscillator is also at the lowest reading since 2017, when the data first started being collected for this particular indicator. Now moving on to Bitcoin positioning. The Bitfinex BTC USD longs are at the buy zone level. Essentially, the last couple of times the BTC USD longs on Bitfinex were at this level, whether it was early 2024, whether it was late 2024, whether it was early 2025. All of these were associated with medium-term bottoms in the market. And again, BTC USD longs have again returned to this level. I have been tracking this indicator personally since 2018. The whales on Bitfinex are considered to be smart money and have historically more often than not have been on the right side of the market. Stablecoin dominance is at levels which have been coinciding with BTC bottoms this cycle. So in a similar vein, spikes in USDT and USDC dominance summed together are essentially associated with fear. When people are fearful, they go into stablecoins, which means that the collective market cap of stablecoins experiences a spike as people go towards safety, towards Tether and USDC. Again, we are currently at resistance. The last 3 times that USDT and USDC dominance was at this level, the market, or BTC specifically, and the crypto total market overall, was at a local medium-term bottom. Over the past several weeks, we've seen the highest long liquidations since the FTX crash. The last time readings were this low was the end of 2022. And now you can see just how high 4 or 5 spikes over the past 6 weeks have been in terms of perpetual long liquidations across all exchanges. So again, this represents capitulation. This means that there's been a reset. This means that there's been a flush in the market, at least on the leverage side of the equation. So if you look at the liquidation clusters, generally speaking, there are more liquidations above us than there are below us. And whether you look at all BTC exchanges or Binance in particular, there's generally more liquidations to the upside than there are to the downside. There's also more shorts than longs, depending on how much faith you want to put into these CoinGlass metrics. But for what it's worth, CoinGlass is showing that there are more shorts than there are longs in terms of market positioning. And similarly, on the oscillator version of this indicator, you can see that there are currently, the reading is at 0.93, essentially telling us that the market is really fearful and there are more shorts than longs in the market at the moment. Anecdotally speaking, and just one whale, but a BTC OG who was selling $1.2 billion worth of BTC over the past several weeks is finally done selling. He or she has been continuously sending several thousand BTC at a time to Kraken. And ultimately, over the past 6 weeks, they have liquidated over $1 billion in BTC. And as of a couple of days ago, they're finally fully out. Recently, there's also been a rumor of Tether sending $1 billion to a Bitfinex address that hasn't been used in a year. And there's been a lot of speculation that this was done in order to buy BTC. This was done not from a Tether minting address, but directly from the Tether treasury. So again, there's been speculation that Tether is taking advantage of this dip in order to accumulate BTC. Obviously, there's also been a lot of rumors that some funds may or may not have taken significant losses on October 10th. And subsequently, they've had to sell a lot of BTC and ETH in order to sort of balance their books. Now that we've had this major 36% drop, you can argue that, this selling was more forced rather than discretionary, right? And since October 10th, that unfortunately wasn't the end of the drop, but rather the beginning. But whether these rumors are or not true, it's likely that, by now, this entity has gotten through a lot of the selling that they had to do. So a very interesting website, BGeometrics, has their proprietary demand index indicator, and it's currently at buy zone levels. The last time we've seen this was during the September 2024 dip in the market. And that has also marked a medium-term bottom in the markets. Another on-chain indicator, dynamic NVTS, is way oversold. Historically, this has also been associated with medium-term bottoms more often than not. BTC sentiment. The fear and greed indicator has hit levels of 10 out of 100, which have been the lowest levels we've seen this cycle. We've been around 11, 12, 15, under 20 essentially, in extreme fear zone for the past couple of weeks. This is not only the longest period where we've been in extreme fear in terms of sentiment, but these are also the lowest levels dating all the way back to 2020, or rather dating all the way back to 2022. There are a lot of very bearish charts floating around from large accounts on CT. People calling for 50,000, people calling for, $1,000 on ETH, people calling for $40,000 on BTC, people calling for 50,000 on BTC, a lot of head and shoulders patterns. Even the people that are bullish, they're only bullish for a bounce to 90K. A lot of people, drawing projection charts all the way down to 31,000. Another gentleman was calling the 25,000. You know, a lot of people are extremely bearish. I don't know if people are just doing this to take advantage of the sentiment, get a lot of views, get a lot of likes, you know, get a couple more followers during the panic. But, you know, suffice to say that the sentiment on social media is incredibly bearish. Again, a lot of charts with arrows pointing all the way down to 20, 30, 40K that have been floating around. A lot of, you know, ghost bar projections of the 2022 bear market. You know what they say, typically during periods of extreme social bearishness is when you want to be looking for buys, when you want to be looking for longs. So we are definitely, you know, ticking that box, so to speak. In a similar vein on YouTube, there are a lot of, you know, very bearish YouTube videos as well, and they're getting a lot of views. And there are a lot of just other than, you know, charts and YouTube videos, a lot of tweets, articles, and blog posts coming out with tremendous amounts of engagement and views about, you know, why we're in a bear market, why capital is leaving Bitcoin, you know, etc., etc. For what it's worth, and I know this has been making a lot of rounds on social media as well, but 0 out of 30 traditional BTC top cycle signals have triggered. Literally not a single one, right? If, you know, I don't know, if maybe 3 or 4 even out of these 30 have been triggered, you could make the argument that, you know, at least some have triggered, but literally 0 out of 30 have triggered for what it's worth. There was still an unfilled gap on BTC on CME at around 91,000, which we have filled last week. Similarly, on the Ethereum CME futures chart, there was a gap at 2,800, which we have now finally, after all these months, backfilled as well. So there's a very esoteric technical analysis pattern called domed house and three peaks, which is typically known as a corrective pattern, after which, historically and statistically, a new bullish wave begins. And courtesy of my friend Cryptomer on Twitter, he has, you know, pulled out the old dusty books for this one, but he believes that, you know, the past couple of years is essentially a domed house and three peaks pattern for BTC. And this is actually aligning with another very interesting idea by Cryptomer that essentially the entirety of 2025, including the last two, you know, local peaks, including the recent price action, all of this is actually just a range. And if in fact all of this is a base and all of this is actually a reaccumulation before the next move higher. And I think this is a very interesting idea. You know, another historically common pattern is what's known 4 bases and a parabola. And during a parabola, essentially you have 4 bases before the final incredibly bullish move higher. And if you actually take a look at this entire cycle in BTC, you can see very clear 4 bases. And we're actually currently in the middle of the 4th base. So if this idea is to be correct, then we are in the base 4 before the final parabolic move higher towards 150, 160, potentially even 200K for BTC. The Binance Bitcoin to stablecoin reserve ratio is at a bullish level. The last time we saw this level was the early 2025 dip during the FTX crash, during the 3AC crash, and during the COVID crash. And actually, this level is currently at the lowest level ever, and has actually been screaming buy signal for the past several days and weeks. So if you actually take a look at the price action of BTC during the last US government shutdown in 2019, what has happened was in 2019, the US government shutdown happened towards the end of 2018. And the market, 4 days after the US government shutdown ended, BTC has bottomed, and that also marked the bottom before a massive parabolic rally higher. So we are potentially seeing a similar situation here as well. The US government shutdown started in early October, late September, early October. It has recently finished in the middle of November. And if this November 21st sharp bottom that we've had at 80.5K, if that was a bottom, then it would be a similar situation, because that would be a BTC bottom 9 days after the US government reopened again. So it's a potentially similar dynamic. And again, it kind of supports the theory that the extremity, the intensity, the speed, and the sharpness of this drop that we've seen over the past 6 weeks, the reason it has happened was because of the US government shutdown. So taking a look at BTC options, we can see that put buying has been dominating taker flow over the past week. Again, supporting the notions that the market is in extreme fear, the market is in capitulation, people are seeking insurance, and the sentiment is very bad. And put skew has been consistently elevated. In other words, the implied volatility associated with puts has been consistently higher than the implied volatility associated with calls. Essentially, there's been way more demand for puts than calls by a notable margin. And you can see this in the charts as well. So essentially, on the option side, you can see that the sentiment is in the complete gutter and people are super, super fearful. This has also been coincidentally a record week for put volume on IBIT, which is the biggest BTC ETF. And for what it's worth, I mean, options I don't think are currently, the core driver of BTC price action, and there are only 3 or 4 days left for this. But the max pain for BTC options for late November is actually at around 102,000. And for December, around 99,000. And with price currently trading at 86 or 87,000 as of this recording, the max pain prices are higher. Similarly, for ETH, what's interesting is ETH is currently trading at 2,800, but the max pain options price for ETH is at 4,300 by June of next year, right? So 7 months from now, the max pain for ETH options is at 4,300, quite a ways away higher from here. On November 21st, that was the highest IBIT volume of all time. And again, this also supports the notion that we've seen capitulation. Capitulation historically happens on very, very elevated volumes. Anyone who's in the markets knows this. This is essentially a place where a large number of sellers finally meet a large number of buyers. The sellers are finally exhausted. A tremendous amount of coins, or in this case ETFs, change hands at this level. This does look like seller exhaustion to me, at least on the medium term. And on a variety of charts, you can see how this was the highest IBIT volume day of all time. Not just on IBIT, if you actually look at all of the ETFs combined, again, that was the highest volume day of all time. The BTC price has also bottomed near the ETF cost basis. I've seen one website point that the ETF cost basis at 79,000. Actually, it must have been a dated level. Another website has said that it was at 82,000, but regardless, that 79 to 82, the zone is the ETF cost basis as well as the ETF realized price. And coincidentally, 80.2, which is just under where we bottomed, is also the BTC true market mean price level. So there is definitely some confluence in terms of certain prices, ETF realized prices and ETF cost basis around that 79 to 83K level. If you look at the BTC realized price distribution, you can see that 83 to 85,000 is also a support resistance / a pivot zone. So it is also not surprising that BTC has some potential to find a medium-term bottom around this level. Coincidentally, the November 21st was also the highest hyperliquid BTC perp volume of all time, similar to the ETF volumes, showing that very likely was a medium-term capitulation, medium-term seller exhaustion, and medium-term sort of first demand level in the markets. Very interestingly, 98% of the AUM in the ETFs are diamond handing. What does that mean? That means that a lot of these ETFs are passive flows. They are not traders. They are not speculators. They are people that are essentially stacking for the long term. And despite a negative 36% drop, 98% of the ETF's AUM are still diamond handing, which is actually quite crazy. Very interestingly, and also in a similar vein, the percentage of the entire BTC supply that is in the hands of the ETF's holders is actually continuing to climb. If you look at the past 2 years, we've gone from 3% to 7.1%. And I believe that this number is eventually going to 15%, 20%, potentially even 25%. And a lot of people on social media have been talking about this. BTC is essentially experiencing its quote-unquote IPO moment, where the early OGs have been cashing out, obviously, but steady diamond-handed ETF passive flows are continuing to accumulate. And as I always say, the fiat system has far more fiat than BTC OGs have coins to sell, right? By definition, the amount of BTC coins that BTC OGs have is scarce, while the amount of fiat that the ETF system has to continue accumulating BTC, by definition, that amount is near infinite. Similarly, for ETH, over the past couple of years, the percentage of ETH that ETFs own has been climbing steadily, regardless of the underlying price action. The November 21 volume on both Binance and Coinbase was even higher than October 10th, which was a very, very crazy day. Again, signaling complete capitulation in the markets, both on Binance and Coinbase, at least in the short term. BTC order books are finally skewed towards the bullish side for the first time in weeks. And again, we've seen a similar thing during the BTC bottom in April of 2025. In terms of BTC funding, we're seeing negative prints, again, for the first time in several weeks. And again, this is telling us that the market is in fear mode, market is shorting heavily, people are capitulating, and a lot of people are thinking that, we are in a bear market, and they're essentially positioning for even lower prices. BTC Coinbase was in a discount for the past several weeks in a row. That has weighed very heavily on prices. And just over the past several days, since November 2021, we are seeing some easing and some normalization here. It appears that the Coinbase discount has bottomed and is finally returning to neutral levels, which I think is another potential sign that we might be reaching a medium-term bottom. BTC versus gold, the RSI of BTC priced in gold is at bear market lows. The last time something like this has happened was during COVID, during the 2018 global bottom, during the 2015 global bottom, and during the period between the 3AC Luna and FTX collapse. So if you're a believer that the current gap between gold and BTC will eventually be filled and BTC will catch up, then this is another sort of bullish evidence in your favor. In terms of the open interest, we've had one of the biggest flushes of all time. This has been the sharpest 30-day drop in OI of the cycle. Again, biggest since the FTX collapse. We've gone from 37 to 29 billion in open interest. That's a very major reset. Fastest, sharpest since 2022. On Binance alone, open interest has gone down from 15 billion to 10 billion. From the altcoin OI perspective, the October 10th was a very massive flush for altcoins. So that froth, a lot of people typically they say alts are frothy, etc. From that side of the industry, froth has also been reset, right? So that cannot be an argument that can be used to make a bearish case, right? Because that OI has been flushed as well. From a DAT perspective. Now, this can be analyzed from both a bullish or bearish perspective, but in my personal opinion, we're seeing that the digital asset treasury MNAVs, they have been reset to under 1 or just over 1. I think this is bullish because essentially the froth on the DAT side, a lot of people were, calling it a bubble, a lot of people were calling it overextended, but, that bubble has essentially already been popped, right? All these crazy MNAVs that we've seen, they are essentially either under 1, MSTR just over 1. MSTR MNAV is at FTX levels, and historically, these levels have been associated with medium-term bottoms, cyclically speaking, in the markets. Metaplanet, similarly, was trading once at an MNAV of 23. Right now, they're at an MNAV of 0.95, I believe, and that sort of froth has also been reset. Nevertheless, Metaplanet continues to borrow dollars against their BTC position in order to buy more BTC. So some buying nevertheless continues. Similarly on ETH, MNAVs have been reset massively. So, that bubble has popped. That cannot be used as a bearish argument. I mean, some people make the argument that because the MNAVs are under 1, some of the DATs are going to, take advantage of this, sell their BTC or sell their ETH in order to buy back their stock. But, the game theory is such that the biggest DATs that actually aspire to be, the biggest, second biggest, third biggest, they know that, market will not respect them in the long term if they play these, short-term trading games. They need to prove themselves as diamond-handed in order to kind of be respected by the holders. And even if some DATs sell, it's going to be, DAT number 6, DAT number 7, that definitionally does not have as many coins as the juggernauts. Bitcoin-backed credit, still a very new industry, but driven by MSTR, it continues to grow week after week. And I think, this is eventually going to go parabolic, I believe, which means that MSTR will be able to buy more and more BTC in an increasingly more sort of sustainable way compared to their past practices. BTC's social risk is at 0, which means that retail isn't even here yet. Now, you can say the bearish interpretation here is that, retail doesn't even have money, retail is not going to come back. But the way I see it is, the reason we haven't seen a parabolic rise in Bitcoin and in crypto overall is because this is usually caused by retail coming en masse, like millions of people coming into crypto or returning to crypto. And we haven't seen this cycle at all. Essentially, this proves the theory that this entire cycle was driven by DATs and institutions. In my opinion, retail isn't even here yet. They are going to come back. They are going to come back in a bigger way that we've seen them come back in a very small way, late 2024, early 2025. I think they'll come back in a much bigger way. And you want to hold strong until then. That is what I believe. So looking at some macro indicators, right? The Fed has begun cutting rates, even though inflation is still above target threshold of 2%. Right? Which is generally bullish. Now, this is a very important chart. We need to understand that one of the several reasons why this cycle has been so hard, why this cycle has been so, low volatility, very grindy, very, up and down, very slow and steady, is because if you actually look at BTC history, this is arguably the most restrictive macro backdrop that we've ever had, right? Interest rates were at 5.5% when this cycle has begun, and they're still at over 4%, right? There's still relatively restrictive conditions. Past crypto cycles were all when interest rates were between 0 and 2.5%, right? Which means that the conditions were much easier. So the very fact that BTC has gone from 15,000 to 125,000 was already a miracle in and of itself. And despite restrictive macro conditions, obviously the ETF adoption and the DAT adoption has driven us higher. Now, the Fed, very interestingly, the odds of a rate cut last week were 30%. Odds of a December rate cut last week were 30%. As of this recording, they are at 81%, which means that there's an 81% chance that the Fed will do another cut in December, which will, historically considered to be bullish for risk assets, including BTC and crypto overall. So the SPY, aka S&P 500, daily volume was the highest since April. And the past 5 spikes like this in volume were associated with local and medium-term bottoms. Why are we looking at this? Because obviously for BTC to go higher, ideally, you would want the stock market to continue its bullish trajectory as well. Similarly, QQQ daily volume has been highest since April as well. Last week, November 21st, a lot of confluences around that being a potential medium-term bottom here. These kind of volume spikes were also associated with local bottoms. The SPY weekly volume was the 3rd highest since 2022. Again, these are typically associated with lows in the markets. And again, on the QQQ weekly side, that was also the 3rd highest volume that we've seen since 2022. QQQ has also found support at 100 daily MA, and also which is also coinciding with a bullish cross on the MACD indicator. The SPY put volume was at the 2nd highest reading ever. And if we do kind of a forward projection, 1 month later, 100% of the time would result in a positive price performance. So last week, we've also seen S&P 500 gap up more than 1%. It was 1.4% to be exact, but subsequently closed negative on the day. And if you project forward returns for this, then 86% of the time, 3 weeks later and 1 month later, prices are typically higher also. We've also been in a peculiar situation where the VIX has been climbing 4 consecutive weeks in a row for the past 4 weeks. While the S&P was within 5% of its all-time high. And again, if you compare past historical situations when this has happened, 80% of the time 6 months later and 93% of the time 1 year later, prices were higher. The S&P 500 forward returns, where the SPX SRI is below 35 for the first time in 7 months, which is a situation which we've reached last week. Historically, 93% of the time 3 months later, 85% of the time 6 months later, and 78% of the time 1 year later, prices are higher. The S&P 500 forward returns when SPX closed below 50 daily moving average for the first time in 6 months, which is again a situation which we've been at last week. Most of the time, 71% of the time 6 months later, and 71% of the time 9 months later, and 71% of the time 3 months later, the prices are higher. NASDAQ forward returns when McClellan oscillator, which measures market breadth, falls below 62. The vast majority of the time, as you can see here, in terms of statistics, the vast majority of the time, 1 week, 2 week, 3 week, and 1 month later, the price is higher. The AAII Bulls Bears indicator is below -12. And actually, the last 3 times this has happened, 100% of the time, 2, 3, 6, 9 months later, and 1 year later, price was higher. Also, on Friday, November 21st, we saw over 1 billion volume transacted in SPXU, which is the 3x short SPX ETF. Essentially, bearish bets against stocks. 100% of the time that this has happened, 1 month later, price was higher. If you look at the percentage of stocks oversold, last week we've seen a spike, which has also been associated with local and medium-term market bottoms. The SPX put-call ratio has actually exceeded 0.7 for 2 consecutive days. Again, 100% of the time which this has happened, 2 months later, price was higher. Zooming out a little bit, if you look at past quote-unquote bubbles can persist for far longer than, you can stay irrational. If you compare this to the 1920s, if you compare this to the gold boom of the late 1970s, if you compare this to the Japan asset price bubble, to the dot-com bubble, and you overlay NASDAQ 100, starting from October 2022, there is definitely a lot of space for this to go higher. For what it's worth, this has been making a lot of rounds as well, but the SPX 500 has never global topped with ISM under 50, as you can see. And, with ISM currently sitting at around 48, a lot of people are speculating that, there is going to be expansion in the business cycle, which is going to send stocks and risk assets such as BTC even higher. On the Mag 7 front, resistance is flipping support. Another credit to Plazazo, aka Nanya Business. If we use Mag 7 as a barometer, nothing unusual yet. In fact, it's the opposite. Testing the prior all-time high 4 months later has been the norm. This has happened several times, dating all the way back to 2015. We break a previous all-time high on the Mag 7 and then subsequently test it as support. This has happened numerous times. And again, right now, something similar is happening. So it's definitely not in any kind of anomalous or bear market territory, at least not quite yet. I think this is the most important chart in BTC history. This is BTC price in black overlaid on M2 global year-over-year growth. Now, you can see that the reason we've had parabolic growth in BTC in 2017 and in 2021 was because the M2 growth year-over-year rate went parabolic as well. This time around, it's not a surprise. The reason this cycle in BTC has been very slow and steady is because the M2 growth year-over-year oscillator has also been very slow and steady. So for us to see a parabolic price action in BTC and in crypto overall, we need the M2 global growth to increase exponentially as well, right? There are some signs pointing towards this and momentum is building for this, but for us to see a parabolic price action on crypto, we need M2 growth to grow parabolic as well. This is the single most important chart in crypto history. This has been making a lot of rounds as well. If you believe that BTC follows money supply, as I personally do, then this is one of the biggest gaps that we've seen over the past 3 or 4 years. And if you believe that BTC is eventually going to catch up to money supply, then it shows that money supply continues to grow and BTC is likely to catch up to that as well. Very important for crypto prices is the dollar index, and it's currently at a resistance. Right? This zone acted as both resistance and support dating all the way back to 2015. Between 2015 and 2020, it has acted repeatedly as resistance. Between 2022 and 2024, it has acted as support numerous times. Subsequently, in early 2025, it broke down below it, and now we're retesting it again from the underside. Typically, whenever you buy any kind of risk asset, you rather want the DXY to be at resistance, at which it currently is. The US Federal Reserve has announced that they will be ending their quantitative tightening program in December 2025. And this is widely considered to be bullish for risk assets as well. It's not immediate and it's not a perfect, the day of, week of, but in generally speaking, QE is good for crypto prices and QT is bad for crypto prices, right? You see here in 2013, the Fed was expanding their balance sheet and crypto prices did very well as well. In 2018, they were reducing their balance sheet, aka doing QT, and we've been in a notorious bear market. Similarly, the Fed was expanding their balance sheet very rapidly in 2020 and 2021, which also coincided with the BTC bull market. In 2022, the Fed was reducing its balance sheet, and that also coincided with a bear market, both in stocks and in crypto. So in December, the Fed will be reducing its balance sheet, and this is widely considered to be bullish for risk assets also. Simultaneously, a lot of market analysts are predicting some form of QE light, stealth QE to come back in 2026, some form of Fed balance sheet expansion to start happening once again. And while it's not going to be huge at post-COVID levels, this is generally considered to be marginally bullish for markets. So the last time what has happened was when the Fed announced QT, we've seen what people refer to as the QT-QE pivot flush. Essentially, BTC price first went down. If you ignore the COVID collapse, I believe that it would be likely that price would bottom at around 6,000. That's also the level where BTC has found support after COVID as well. And so once the QT stop was announced, we first see a flush, and then sort of a bullish price wave begins to happen once sort of QE starts going. Similarly, perhaps one theory is that this announcement of QT being stopped similarly resulted in BTC first seeing this QT-QE pivot flush. Then we need to chop around a little bit, and once some form of QE begins again, then BTC is going to start doing well again, and playing out in a very similar story potentially, right? So at the more sort of political / administrative level, right? US administration is doing everything it can to promote BTC, crypto, ETF, stablecoins. This is arguably the most crypto-friendly administration that we have ever seen, right? And this is going to continue to be the case. And this is generally a bullish tailwind for the crypto markets. Trump admin famously wants to run the economy hot, often talk about needing growth to reduce debt, and often criticizing Fed for far too tight monetary policy. So generally, they want conditions to be more loose. And the Trump admin is increasingly offering extensive support to the AI industry, because AI industry is obviously becoming a strategic national priority for the United States, right? Just this morning, the United States has launched the Genesis mission, which is essentially a way for the government to help the AI industry develop even more, comparable in urgency and ambition to the Manhattan Project that developed nuclear weapons, right? So the US government has also taken a stake in Intel. We're seeing more and more glimpses into this future where, the ambitions of the government and the ambitions of, the AI industry are going to be increasingly one and the same. In many of his interviews, the US Treasury Secretary Bessent has hinted at deregulating banks to increase loans to critical industries, which is potentially preparing for not only lower interest rates, but also to increase the money supply even more. He underscored the need for bank deregulation, easing capital rules, and similar rhetoric we've heard from the OCC chief as well. Trump admin often talks about lowering the cost of housing to release trillions of trapped home equity into the economy and markets. And, this is one of the ambitions that the White House is laser focused on, to unleash that wealth, these trillions of dollars of wealth into the economy and the markets. Trump family incentives are aligned. They have a lot of holdings in crypto, a lot of holdings in the Trump meme coin, a lot of holdings, in their DeFi projects, a ton of board seats as well. So for what it's worth, their incentives are aligned from that regard as well. The Trump administration over the past several weeks has also been teasing $2,000 tariff checks to everybody, especially, the lower classes, lower middle classes, etc. And, in 2020, we've seen what happened to assets from $500, $600 checks. If this is to go through, if this $2,000 tariff stimulus checks are to go through, this would be tremendously bullish for assets and especially crypto, in my opinion. It would be even more bullish meme coins than anything else, in my opinion. We've also heard from Scott Bessent that this could potentially be in the form of tax rebates, but either way, one way or another, this would be very bullish for markets. Now, China wants to end deflationary pressure that's been affecting China over the past several years. And when Chinese economic pressure is high, they usually print money in one form or another. And, the China Economic Pressure Index that measures these sort of deflationary pressures, it's at a level which has historically been associated with money printing in one form or another in China. And Japan, just a couple of days ago, has officially announced a wave of 135 billion in stimulus. So, we've talked a lot about the bullish signals. It would be unfair not to talk about the risks as well. So in my opinion, the 4 risks affecting markets, both crypto and the markets overall, is obviously the stock market, Mag 7, AI bubble, kind of stopping short in its tracks. It's BTC whales selling even more than they already have. It's dollar strength and the business cycle rolling over. And it's the fact that liquidity may potentially deteriorate, right? These are the 4 sort of issues that I would be paying very, very careful attention to be considered kind of risks in the current landscape. So these were 116 reasons and charts that are kind of pointing towards the current situation being a medium-term bottom in the markets. I personally lean towards the fact that this cycle will last longer than 4 years. I'm not a 4-year cycle believer. I think this cycle will last, 4.5, if not outright 5 years. And I think this cycle will extend all the way into 2026. Stay tuned for more videos analyzing markets and the crypto industry at large. Thank you.